Hello, this is Daniel Grady with a quick overview of the markets for today, Wednesday, October 2nd. A quick reminder that this is for information purposes only, does not constitute financial advice, and trading with leveraged instruments has a high level of risk. Right, we'll start with the major news that's going to be affecting the markets today, and it's largely overshadowed by the continuing budget debate in the United States and the federal government shutdown. However, the effects of the shutdown have been largely already priced into the market. If we look at, for example, here the S&P 500, which is a good measurement of the overall risk sentiment of the market, we can see it continues to be trading near record highs, and that even following the federal government shutdown, the index actually continued to go up. The debate is expected to continue for several days. The only risk associated with it would be the possibility of a resolution, which could cause the markets to stabilize and continue to go up. In the interim, trading is expected to be relatively muted and biased to the downside. Switching to the economic calendar, we can see that there are two important events that are coming up. Well, one of them, two events that are tied together, which is the European Central Bank interest rate decision, which will be at 12:45 GMT. There's not expected to be a major development. Interest rates are expected to remain at 0.5%, a record low. But investors are probably going to be looking 45 minutes later at the press conference that the ECB President Mario Draghi will be giving, in which he'll give forward guidance to the market about what the policies of the ECB will be over the coming days and months. The other event is at 11:15 GMT, which would be the unemployment figures for the United States. Moving back to an overall look at the markets, the S&P, as mentioned before, continues to trade upwards along with American futures. The FTSE 100 continues to trade down, which is in line with what the Nikkei performed during the last session. The euro should remain relatively flat pending the decision from the ECB. Resistance levels remain at 135.70, which has been established in prior sessions, and the market has tried in several times to breach 135, which remains an important psychological support level here. Switching to the Japanese yen, we have an overall downward bias due to general weakness in the dollar. Support is expected at the 23 Fibonacci retracement level, which is 97.15, and we have a general weak resistance level at 97.80, and a much stronger resistance level at the 50% Fibonacci retracement level at 98.30. 98.30. My mouse isn't exactly precise here. Switching to the pound dollar pair continues to trade within its upward channel. There's been a series of positive news out of the United Kingdom, which continues to give the pound overall strength. The general weakness in the dollar will also contribute to maintaining the pound in an upward trend. However, it is near the top of this channel that it's been maintaining since July, so there is a possibility of a short correction, possibly over the next week, maybe during the next day. And finally, we have gold, which continues its overall downward trend. There was a relatively significant drop yesterday, and even though there's an overall downward trend, what we could be looking at is a possible short-term correction, especially considering that it is close to, or has actually hit the 38 Fibonacci retracement level at 1,285. So either today or tomorrow we could look at a brief correction, and then gold will return to its downward trend. That's it for today. Thanks for watching, and happy trading.